Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Pål Krogdal and Ville and Pål. This is Fintech Daydreaming.
Hello and welcome to a new episode of Fintech Daydreaming. We are well into 2025 and this is the second episode of season 11 of our podcast. My name is Ville and Pål. I will be your host for today's conversation and I'm joined by my partner not in crime, Pål Krogdal. So Pål, how are you?
I'm checking my calendar. You're stating that we're well into 2025 and according to me it's still January. I'm just making sure that I haven't dropped into a time machine and something's gone wrong. What are you doing, Villa? Way into 2025 and it's January.
It's again, we're over mid-January. So again, it feels like well into it because I'm doing a dry January. So it really feels like a long time.
Yeah, I was doing exactly the same, but I think you know that I failed a little bit on that. Was it a weekend or so ago? You were with me, but it was only a small drink. So are you allowed to say you've had a dry January even though you had just one drink?
Slightly damp.
Yeah, slightly damp. Yeah,
slightly damp January. I'll go with that one. I'm having a slightly damp January to go with your dry January. But as we live in Finland, where it is snowy, ice cold, and temperatures that would freeze a penguin's off, I would say that I'm entitled to be slightly damp in January.
Great. All right, good. But as you can hear, we have a guest with us as always. And again, welcome back, Leda. It's been a while since we had you on the podcast, but I'm really happy to have you here. So why don't we start with the usual thing? So maybe for those of the listeners who might not know who you are, a short introduction, and then we can go on with the conversation.
Sounds great. And it's great to be back. And you know, when you said we're well into January, I was like, that's his way of saying, don't say Happy New Year. Enough of that. It's great to be back. I have known both of you for quite a long time now. You know, it terrifies me that I can say that I've known professional contacts for 20, 25 years because it makes me feel older than I realize I am. But the reality is, I've been working in banking technology transformation for about 20, 25 years. I have worked on all sides of the equation. I have been a banker for quite a long time. So working inside global regulated entities. I've been on the software provider side. I've been an advisor. I've worked as an academic. And as we discussed last time I was here, I've been writing a lot about the things we're getting wrong. And there's a book I think had just been published last time I was with you a couple of years ago, hovering over my shoulder for those who have video, on all the things we are doing wrong. And I have a new book coming out in a few days, so it will be out by the time we air this, on all the things that we have been doing right when doing transformations in the last 20 odd years. Not many of them actually, but at least some. And for the record, I am not doing dry January. Yeah, we actually, my mother was unwell during Christmas and we spent Christmas in hospital. And as we were going to the canteen to get some food, my sister said with very serious face, "This is not the year we're doing dry January." Like, no, it's not.
Indeed. But hey, let's hope for the best possible year for 2025, even though, of course, the omens are not exactly in our favor at the moment, but let's see how this plays out. Who knows? It might be a positive surprise. And again, I think one of my friends said when I said that I'm doing a dry January was that, well, I'm doing a wet AF January, so balances out.
Yeah.
Good. But hey, again, really great to have you back. We're going to talk about your new book. We're going to talk a little bit about your previous book as well to see how things are going. But before we get into all that goodness, we do owe our listeners the usual joke that we do, unfortunately, every episode in this podcast. So, Pål, I think it's your turn this time to tell the joke.
It's fantastic to be back in the joke seat again. Yes, it's But it's bad. It is a very, very bad joke. I had to dig low for this one, and even this one I'm embarrassed to share with you. But why do credit cards never get drunk? Talking about dry January and everything else, but why do credit cards never get drunk?
I'm tempted to say something related to the fact that plastic doesn't absorb liquids or something, but I think you might have an even worse answer.
Yes, it's because they never go over their limit.
But don't they sometimes?
we have to allow, some leniency here, but
Poetic license for the terrible joke.
exactly. Yes.
Yeah. Okay.
And don't blame me. I mean, blame the Google results, as I was frantically trying to look for yet another really bad joke that we could use on this podcast, because I think we've exhausted every single possible banking or fintech related joke that's out there. And I think we're going to have to start going back into recycle mode and bring up some of the old ones.
Did I ever tell you that maybe I mentioned this last time we recorded around the joke, but I worked with a fantastically talented team during a really difficult period. And the difficulty was partly circumstantial, partly linked to the organization we represented. But the reality was that our team was faced with unhappy clients with some regularity. And often it was the client is unhappy because was followed by something that was entirely in the gift of our organization, which is frustrating, right? Where it's really, really, it means you can fix it, but it's also embarrassing. So after the first few weeks, when we realized that this was the theme of how our lives would be for a few months, I said to my team, right, we're in the middle of lockdown. If you're going to be bringing me bad news in a difficult situation, I want a fun fact. And so for the first couple of times, they were like, does she mean it? Does the new crazy lady mean it? It's like, no, I absolutely mean it, because we really need to take a little bit of the sting of how depressing this feels. But of course, what happened, to your point, Paul, is that because we needed those fun facts a lot, people exhausted all the fun facts that they had at the top of their head, and they all subscribed to a series of websites that provide you with random fun facts that are actually quick and easy, because you don't want to be talking to your boss for 20 minutes before you bring them the bad news. We exhausted those after a while, but then the deployment went well and we didn't need them anymore.
Yeah, happens to all of us. I think. Anyway, let's move on. I would have another story about the fun facts thing, but again, let's move on to the actual things that our listeners will be hearing about, which is all the good stuff around fintech and your new book, Leda, as well. So moving on. The last time we had you on, Leda, you had just released the new book, or your new book back then, Bankers Like Us. Yeah. We're still not sure whether bankers do like us or not, but we'll digress we'll leave that question aside for a bit, because you have a new book out, and it's called Beyond Resilience. So again, maybe tell a little bit about your journey. I mean, since we last talked, I mean, from your previous book to this current book, how was the journey and what motivated you to write this new book?
So funnily enough, I wanted to write the second book when I was halfway through writing the first book. And I called my publisher and I was like, I don't want to write this book anymore. I know how it ends. I've been working on the themes of failure and how we get in our own way for so long. I want to work on the reverse, because if you think about it, and that's the premise of Beyond Resilience, is 70% of digital transformations in big organizations fail. And depending on which metrics you choose, between 90 and 98% of startups in financial services fail. So really high failure rates, whichever way you look at it. But it's not zero. And we've been doing it, as we said at the beginning with the introduction, long enough that actually, even if you only take the 2% of startups that succeed and the 10, 20, if you believe it, percent of digital transformations that succeed, that's enough to start looking for a pattern. So that's what I went back to my publisher and I was like, I don't want to write Bankers Like Us anymore. I want to write a book about this. And thankfully for me, he said, no, finish what you started, and you can make this your second book. But so the idea of what's the other half of the story had been really percolating for years, actually. But for those who read my first book, it's a lot about my own experiences and my own reflections and observations from 20 years of my own career. For the second book, I actually went out and did a bunch of interviews. And although it was absolutely fascinating to do the interviews and try and synthesize people's experiences, I have this added anxiety now that a very large group of industry friends and contacts and people who have immense credibility have trusted me with their stories, and some of those stories are not necessarily public. I mean, they're happy for them to be public, but they're not common knowledge, and there's a lot of responsibility to doing them justice. So I'm very excited about this book coming out, but also nervous that every single one of the people whose ideas are represented will read it and go, yeah, I like that, and I agree with it, and I'm happy to be a part of it.
Great. I did get a chance to glance through your book. Unfortunately, I didn't have time to read it cover to cover, but I did manage to read some parts of it. And I think one of the things that kind of stuck out to me was at the very beginning, you mentioned about the process of writing this book when you researched and you had these interviews, and then you had feedback from your peers basically saying that how can you be sure that these people are telling the truth? Aren't they always painting the most positive possible picture about themselves, rather than finding multiple angles to these stories? So maybe, I mean, what was your rationale in writing the book this way, rather than like a journalist kind of a methodology, if you will?
It's a very good question. So I'm not a journalist, right? So I'm not a journalist, so that wasn't even a temptation. And to be honest with you, I have a few books. I'm actually looking at some of them on the shelf across the room from me that have what I call a gotcha attitude, that are people who either write about a particular topic or write about a company where they worked, and it's airing dirty laundry. Some of them are absolutely fascinating, like books that are actually unpicking the Wirecard scandal, right? The book Unpicking the Wirecard Scandal is fantastic, but it is written by a journalist who is not looking to continue working in this space. So to be absolutely honest, I was never going to write a book that would burn my relationships and burn my bridges. We all have stories that we could share about the things we've seen. I don't believe that there is any value in sharing those. But I do think that there is value in sharing what people feel they've learned from their journey. And so one of the things that I try to balance, and hopefully as people read the book, they can tell me whether they think I succeeded, is I didn't ask anyone, tell me about your success. But I did ask people to tell me about their learnings through 20, 30 years of experience. So I think that if you pick up the book, you might find someone in there and go, oh, I don't think you succeeded, or I worked for you and you were terrible. But that doesn't take away what they learned from their own journey. And I must admit that there are a few people in there that I have additional context for that I didn't necessarily share, but that doesn't take anything away from those reflections, I hope. It was a balancing act, and one that I was very intentional on not wanting it to become a tell-all. I wasn't out looking for an exclusive. I'm sure that there are journalists out there who are going to do that. And I wanted people to be comfortable with the way that their stories would be presented. But at the same time, it wasn't a forum for them to tell their stories. I hope I succeeded. I hope I succeeded. You have to tell me whether I did.
Very often
Yes.
when you read books like these, I mean, just like Villa, I haven't had time to read through your whole book. I'm a very slow reader, but I've enjoyed what I've read.
And I did only share it about 3 days ago, to be fair.
Exactly, yes, but we do try our best to try and be prepared for time with fantastic people like yourself. But very often when you read books like this, particularly when it's based upon interviews or discussions with other people that you're then representing in the book, there tends to be a balance between writing a book about heroes or writing a book that will help people in the future to be heroes. Did you set off with a mindset of, I want to make these people heroes or to shine their lights for them? Or was it more, I want to bring good examples to the world to help other people to be successful in the future?
It's such a good question again, and a very thoughtful one. I specifically didn't want to make these people out to be heroes because there's enough of that out there. Like, in fact, I often pick up books. Sometimes people write about themselves, other times they're written by others, and you're like, oh, come on, like, this is not real life. And I specifically didn't want that. I wanted the book to be messy, because life and work is messy. And anyone who has actually done operational work, you have a glorious start when everything is pristine, and that's about it, right? So I really wanted to speak to people who would share those messy stories and give tips that are helpful. And exactly as you say, maybe they'll help someone, if not be a hero, then at least protect themselves from some of the worst or more predictable problems. I fell into a completely different space, though, as I was writing the books, because the life stories of the people I spoke to and their resilience, and that's why the book is called Beyond Resilience, because at the end of the day, we have this narrative that people who do this work need to be resilient, and they do. But there's actually quite a lot more. It doesn't just, you throwing yourself up against the wall isn't the only thing that needs to be done. But it is absolutely necessary. So although I started not wanting to write a sort of heroic saga for these people, I didn't succeed entirely. And there are sections of the book where I'm like, okay, like, there's some spectacular personalities and life stories involved in this that I have to put out there. Because one of the things that I do say in the beginning of the book is that you don't need a spectacular or dramatic or traumatic origin story to be able to do this work. However, a lot of the people who are resilient enough and determined enough and go, yep, let's do something that nobody has done before, tend to have these like super interesting origin stories that in many cases, not all of the cases, but in many cases, they've seen a lot more, they've seen a lot worse, they've seen a lot scarier. So actually starting a company or taking on a complex program doesn't faze them.
One other quick question, and sorry, Ville, you can take over again, but as you've spoken to these people, one of the things that comes to my mind is as I've walked around the world or traveled around the world and met people, there are cultural differences that always come into play here. Did you find, as you were talking to these people, that culture or the way that the region that they live in has impacted or changed or influenced them in being successful?
Oh, interesting. I thought you were going to go in a slightly different direction with that question. I thought you were going to ask me about the culture of how people shared and how willing they were to tell their personal stories, which also had an impact. No. So I did, there was some scientific rigor to my research, but if an academic got their hands on it, they would shoot me. That said, I have spoken to people, to individuals and companies from across the world. So I have almost every continent represented. So the cultural component didn't come across as strongly as a few other things. Obviously, opportunity is a big thing, right? Like, actually, if you look at the even though there are people from a variety of different countries, they're all, I was about to say they were all countries that had fairly easy access to the digital economy. But then one of the companies that I represent in the book is Pismo, who came out of Brazil and have become an incredible success story. And tech giants coming out of Brazil is not something you expect to hear. And so they did, and it was amazing. There is no pattern emerging on the cultural side. There is a pattern emerging on the gender side, which I didn't go looking for. But and again, there's no statistical significance because my sample is about even men, women, but it's about 60 odd people. It's not huge. But as people go through their journeys, almost every single one of the men I spoke to talked about learning humility and becoming more self-aware and more humble about the things they don't know. Every single one of the women talked about getting self-confidence and knowing that they're as good as everyone else. And I think there is something culturally constructed but geographically agnostic in that.
Yeah, and speaking of people, maybe we can build on this person-centric approach to talking about the contents of the book a little bit further. And first of all, glad to notice that some of the people you talked to were familiars from our podcast. So you had Monica from Enfuse, you had Kelvin from Odax. You can go back to our episodes where we had fantastic conversations with both of them. Especially Monica's conversation was fun because it was one of the few explicit rated episodes of
oh yeah, no, I had to go back when she was signing off for her comments, Monica, if you can hear us, and I was like, I might take some of the words out. Like, that's not how I said it. I was like, I know, but I am publishing with an American academic publisher. I don't think this will get through.
Indeed. But that's Monica for you. She's a personality, of course, among many others in your book, of course. And the first kind of question around the further contents of the book is related to the persons you did interview. So obviously these people are very expressive, very successful in their own regard. But one thing that is kind of a cliche or a pattern, I would say, even in the fintech world, is the so-called concept of a superstar or a rock star founder, a person who is like this sun in the middle of everything that creates the culture, creates the company, and with a sheer force of will makes things happen. We've seen the likes of Revolut and Klarna being talked about as with these superstar founders, but the way I read your book is that you don't think that this is a critical element of success. So
you're absolutely right. I don't.
Yeah.
And I think someone like Monica is a superstar by anyone's definition, right? She has the star quality. She's got the following. I actually mentioned to someone that she was in my book, and I'm like, oh my God, I love her. I know she's so you have some people that have that allure, but she doesn't buy into her own narrative that way. So I think some of the superstar founders that we often talk about, I was like, do you know who I am? There are two things there. One is you're absolutely right. The heroic founder is not necessary. And the success stories that actually are commercial success, viable businesses of almost exclusively a different type of founder who's teachable and doing the hard work. I would say that what I found is that a rock star heroic founder is not necessarily 100%. In some cases, it actually gets in the way. Not necessarily the person, but the narrative that you have this expectation that you'll pit yourself against the world, that actually, because it puts you in a place where is the difference between obstinacy and conviction, right? And one of the questions I asked my interview subjects is, who's telling you when you're being an idiot? And the reality is that if you are the rock star founder, particularly if you're not part of a strong founding team, the reality is there might be no one telling you you're being an idiot. Now, Kelvin's answer was everyone, which I think is probably not entirely true, but it's a mindset of how he's trying to set up his team, right? So I think the idea of the rockstar founder goes with the founder standing alone heroically against the world of naysayers. There's a whole narrative that we've bought into because it's very cinematic and because it makes for a nice montage. But the reality of building a business is you're going to need to pivot. You're going to need to take feedback. You're going to need to persevere and do the hard work, but listen. You're going to need a lot of people to help you along the way, and you're going to need the humility to do that. So founders matter. Founding teams matter. Heroic founders matter a lot less than resilient ones.
Do you think that maybe this is a little bit from my experience and having worked with some startups and founders? I tend to find that it's not generally just one person. It tends to be better when there are multiple people. I mean, you even look at Enfuse, there's two of them that founded it. And
Yeah.
not being sexist or anything, we're gonna get beaten up. But you know that old saying that behind every successful man is a strong, successful woman. Maybe it's the same sort of dynamic as well. That there are two. There's one that's the rock star, and then there's another one that's
I mean,
the
Denise
common
is
sense
a
one.
quiet rock star. She's just more quiet. Although one of the things she says during the interviews in the book is she's becoming more like Monica as the more they work together. So watch this space. There are a couple of things there that are very interesting, right? One is I did not find a very strong correlation, but again, I was not looking for statistical significance of the stability of the founding team. There are some companies that look at it as their superpower. So I have Pismo in there, co-founded by 4 people who've worked together before. Pension B is one of the companies I'm looking at. Same founding team has stuck it together, and they will talk about the acceleration and the trust and the cultural affirmation. But even companies that have changed the leadership team around the table or changed the entire makeup of the team will tell you that the people you have around you matter at all times, but they might not be the same people for the whole journey. So the takeaways, the team matters immensely, but the team staying the course for the whole time doesn't matter as much. But having the right people doing the right work in the right way does. So one of the people I interviewed is Valentina Christensen from Oak North, and she talks about the co-founders of Oak North in terms of both the relationship they have between the two of them, but also the relationship they don't have with the outside world. And I think we fell into this narrative of the fintech world being a very visible world, because for a while that's how we did investment showcases. So there was, if you think about like the early days, the events and the investment showcases and the startups were all in one place and it was all mangled up. But if I think now about the most interesting companies I work with or have been on the board for, who have had the best return for their investors, who have really solved problems for their customers, you probably have never heard of their founders. So they're not part of that circus. And Valentina talks about the Rishi and Joel, the founders of Oak North, as the two most successful people you've never met. So I do think that we probably are at that sort of fintech 3.0 phase of redefining what a rockstar founder looks like. And it will be someone who gets governance right, someone who understands how to set up a risk committee and all that stuff.
Yeah, you bring up another interesting dimension in your book, which is time. So there's a lot of things in the book about what different parts of the evolution you need to do. There's things you need to do in terms of like pivoting. You need to have the right team and right team composition. Linking a little bit back to the previous question around the superstar rockstar founder, do you think that there's different types of leaders you might need for different stages in companies? So for instance, I mean, are there people who only find companies and then leave after 2 years?
So again, there's no statistical significance to this. So someone can go and do a PhD on all of those numbers, but 100%. So I found a couple of very interesting things. One is that people reflecting on their own journeys also reflect on the part of the journey they enjoy the most. So there are a few folks like the CEO of Revolut Mexico, for instance, who I've known for a very, very long time, and I adore him, and he's a wonderful, wonderful human being. He's had jobs in really, really big corporates. He started startups, and now he's setting up Revolut in Mexico. And he describes himself as a planter, not a farmer. Mm. So he's very self-aware that that's the part of the journey he enjoys the most. But one of the other things that I found fascinating was speaking to Christian Nentwich, who's the founder of Duco and was the CEO of Duco during its growth, and now is still on the board but has stepped down from that role. Is not only do you need to know when to move on to the next thing, but he said something really powerful. He said that the you that started this journey can't finish it. you need to be very mindful of how your job changes and what the job needs from you changes. And some people are better at realizing that. I think going back to that image of the rock star founder, if your whole persona is being heroic, soared aloft, then chances are you're not going to be in tune with the cue that you need to change now. You need to take different advice. You need to lean into questions differently. But I think if you think about there are some things that are needed from you that will change. Your job will change. Your company will grow and will need different things from you. So you need to evolve, and it might be that you don't want to evolve to the next thing. And that's okay as well. Actually, knowing that about yourself is super valuable.
Okay, so now we talked about the people you talk with, the interviewed for this book, and established the founder myth and the things around that. So let's take a bit of a more helicopter view into the overall content of the book as well. So we talked a little bit about this almost like cliches in the entrepreneur, fintech founder kind of world. But the interesting part about the book, of course, is the patterns of success. So patterns of failure, patterns of success, but focusing on the patterns of success. So what are the kind of main things that you are able to observe from the research that you have done? That what are the common factors of success for the successful fintechs in this case?
So it won't surprise you to hear that the message is you have to do a lot of hard things at the same time. And one of the things that came through very, very strongly in the research was everyone knows these things are important, but most people think these can wait for later, and they can't. So there are, I would say, from a startup perspective, because of course I'm looking at both big corporates and startups, and there's some stuff that is common to both, and there's some stuff that isn't common to both. So I'd say from the startup perspective, I would say 4 things, right? The first one, which came through so strongly and it made me uncomfortable as I was writing it, was when you have everything to lose, you have no money yet, you haven't started working on anything, taking the time to do the important things right is counterintuitive, but consistently a theme. Now, what that looks like varies between companies. So Udaya Karaju from Bond AI says that he takes months to hire, and he allows teams months before he expects them to be productive. And he needs his investors to be okay with that because he has a very particular way that he thinks about talent. The Pismo team took a year to whiteboard what type of company they wanted to be, how they wanted to go to market, how they wanted people to feel about a year. Can you imagine when you're not earning? Similarly, Monica and Denise, before they even started putting a fuse together, put together a parameter of how they will solve any problem that arises when they had nothing to solve for. So the theme of taking the time to lean into what's important to you, and that will vary, and do that right and set up good bones for your organization for the thing that is most important to you comes through again and again and again. And even for me, I know it's true. I did the research. It was uncomfortable writing it because I have worked in the startups that you hustle like crazy to get the seed capital in, and then you're on the clock to get the proof points until you get your Series A, and you're on the treadmill. So actually taking that time is an act of leadership, and it's super hard. And that's the first thing I would say. The second is linked to what I was saying about the Monica and Denise conversation. Every business has limited resources. Even if you are Citibank, you will have a limited amount of time, money, and headspace. There's only so many hours in the day. Even if you have an army of people, there's only so many of them. So there will always be conversations needed about what you will do, how you will do it, what you won't do, and what you won't do now. Negotiating a language for those trade-offs early on is a winning mechanism. Now, very few people were as thorough as Denise and Monica in this, but actually working out, this is the kind of company we are. These are our red lines. This is how we solve tension. Super important. The third thing I would say that came through with the startups, and it came through with stories that are extremely painful as you read them, because it mostly was realizations after people got it wrong, is that fundraising is amazing, but it's a trade-off. And it's not just a trade-off of equity for money. It's a trade-off of headspace and time and direction. So the reality is that when you're fundraising, chances are you're not thinking about your boardroom. You're not thinking about your product roadmap. You're not thinking about the way your company will evolve. You're thinking, this amazingly credible VC is willing to back my dream. I'm going for it. And one of the things that came through very strongly, and the stories are painful, is founders going, well, this is what happened to me when I took the wrong money. And some of the wrong money is awful. Some of it wasn't the wrong money in any sinister way. It was just pulling the company in a direction that wasn't where it was going. So actually being mindful of those trade-offs and turning money down when you don't have it, terrifying, right? But actually these are the things that the successful ventures have in common. And they need to give time to the right things at the right time, which is super hard.
Indeed. I think that's quite rare instruction, I would say. Typically, it's like this hustle, do things fast, break things kind of mentality that kind of gets the headlines many times, feels like. But in reality, it seems like that the patterns of success are somewhere completely different.
It's unsexy. And I think that's where the image of the heroic rockstar founder, top of the hill and all that, doesn't help, because actually the things that you need to do are invisible, need patience, need to be done consistently. Like one of the other things that comes up again and again and again is governance. Like no matter what you're doing, you will need to manage your shareholders and your stakeholders so that you can continue existing, which means that you need to provide structures, appropriate touch points, appropriate levels of information early on and without panic, because by the time you've panicked, it's too late. It doesn't sound heroic and sexy. When you're thinking about founders in Silicon Valley, you don't think about governance, but we're in finance, so you should.
Indeed. Even at the risk of going a little bit back to your previous book, which was more focused on the working inside a bank, these common success factors you mentioned was for startups. Now, both me and Paul, especially, we were working in the trenches of innovation and in large incompetent institutions like banks for most of our careers, I would believe. So what would be your instructions to people working with digital innovation in banks in context of your new book and what you learned during your research? Are these transferable automatically to incumbent organizations, or is there something that we might need to adjust?
They're not transferable automatically, although there is definitely transferability and inspiration. But I've got you, because I looked at corporates, I looked at big banks, and I also looked at big bank-owned challengers. So there's, as you can imagine, it's a bit of a sliding scale of commonalities. For the people doing transformation inside big banks, there are three things I would say that stand out. And if you've read my first book, the reverse, the mirror image of them is already talked about, because the things we do well and the things we do badly tend to be very closely aligned. The things that big banks that succeed do well is knowing how to learn. And I talk about the closet of shame a lot in my first book, about the fact that when something fails in a big bank, and I've seen this again and again, the usual post-mortem is done in a way that helps people save face and not get fired, and then we never talk about it again. So learning how to learn needs to be a discipline that sometimes has immense amounts of innovation governance, and it gets very frustrating, but you need to have a methodical way of capturing learnings. And so the big organizations I spoke to that were deliberate about the learning said that, for instance, you need to accept the fact that if you're carrying the balance sheet of a Euroclear or an ING or a DNB, you need to accept that some things are just not big enough for the bank to get out of bed for. And although you always want to do contained experimentation, or we thought that we wanted to do contained experimentation so that the risk footprint was manageable. The reality is if the upside isn't big enough, people won't get out of bed. But if the risk is too big, that people won't get out of bed. So actually, one of the most honest things in the book is that you need to find the right size for you. It needs to be within your risk appetite. It needs to be aligned to the way you do business, and it needs to be pushing the boundaries in the right ways. But you need to keep going, because the thing that was terrifying 10 years ago actually will get you to where you need to be now. So I think that's one thing. The second thing that I found super interesting is being early can be a strategy, but you need to be confident in it. And one of the things that came through from the Cuscal positioning, particularly around their retail digital footprint around A600, was we were early intentionally. We deployed capital. It was a strategy. We waited the market out, and then we cashed in. But we backed our own convictions. The third way that also very interesting, that comes back to backing your own convictions, is the Capital One story, who talk about big bets company-wide and the discipline of fixing forward. And that was one of the things that actually I wish I had more of in my career so far. The idea that if you decide you're going to do something, don't mess around, don't hedge, don't create optionality. When something goes wrong, and it will, force your company to fix forward. And that's so terrifying for a big organization. But the Capital One message was burn the ships. So when they moved to cloud, the idea was migrate everything. Do not create the opportunity to roll back to your on-prem or mainframe solutions when something goes wrong. Force your teams to fix forward, because if you have the backup option, people will take it. If you don't, they'll find a solution. It's a very public story. It's actually on their website. But what do those three things need? They need leadership and courage. They need leadership and courage of a kind that we often don't think you need. Like the heroic founder, you actually need it inside the big banks. The other thing I would say about big banks, which will be familiar to all of us, is you need to be prepared to lose mindshare. Actually, that's the biggest thing that we don't talk about enough, that we all know you need a sponsor. We all know that you need sponsorship at the right levels. And there's some interesting hints from various people in the book about you can have too much sponsorship. You can have too much attention, which will actually force you to do things faster than is good for you. So there's some interesting nuance about where to get that sponsorship and how to manage it. But the reality is, if you're going to do a complex piece of work, you're going to lose mindshare. At some point, you will struggle to get people to pay attention to you. And there's nothing you can do to prevent that, but you can do a lot to anticipate it. And that's one of the realities. It's currency of another form, right? If you're a startup, you might run out of money. If you're a corporate transformation person, you'll run out of attention. How do you manage that?
Go ahead, Paul.
Yeah, I was just going to say, there's the one point that you brought up there, the small little tidbit, was also around time, right? If you try and do something big too early, sometimes you realize that it is too early. The technology maybe isn't right there and ready for what you're trying to do. You mentioned cloud. We've seen a number of banks that have really said, we're going to go to cloud, and then very quickly realizing that they moved too early or they didn't have full capabilities to do it. Yeah. I agree with you, fail forwards and so on. But sometimes there is a tendency of following the hype and engaging on the hype too early. And therefore, if you do burn your boats, you actually end up in a worse situation.
Yeah, you have no boats.
Exactly.
Yeah, you're right. And actually, one of the cases in the book is an example brought by the ING team, talking about the fact that they played around with the Internet of Things early on and realized that actually it was too early for the market. They backed out. I think you only burn your ships when you really, really literally bet the farm on something. So I think there's an interesting degree of optionality. So you hear ING going, we did it. We realized we're too early. We learned from it. So we don't go to that horizon. We come closer. You have Cuscal who go, we invested in a retail digital bank in Australia when there wasn't another one, and waited. And we knew we had to wait, so we deployed the capital and then decided to cash in when the opportunity arose. But neither of those required a transformation of their existing business model, though. Whereas when Capital One, their leadership team decided that the cloud is the future, that needed a degree of conviction. And so you need to identify which nature of bet are you backing here? Because you are absolutely right. If you bet the farm on the metaverse, then you're going to lose the farm. But if you bet the farm on the fact that system to person connectivity is the future, chances are you won't, you'll be fine. But it's still a risk. And one of the things that I come back to in the book again and again, which is why I ended up talking about the heroics, even though I was absolutely determined I wasn't going to, is that you need to make a lot of hard decisions on incomplete information that go against the grain. That's the whole point. If you're building things for the first time, you need to do different things with no blueprint, and you need to do them differently. And you need to be consistently going against the grain and making decisions on incomplete information against the clock you can't see. That is terrifying for most people, and you're guaranteed to get some of those decisions wrong. So it does take a particular kind of person who can actually face that. I mean, one of the examples in the book, and it's a reference to sales, but I think it applies to everything. It's like, in this game, you're mostly losing. You need to be okay with it. You need to be okay with the fact that you're going to get things wrong. You're going to have to guess. You're going to have to make calls that don't pan out.
Yeah, wow. I mean, I was just looking at the time. Unfortunately, we're already running out. I cannot believe, because I had a very long list of questions that I wanted to go through. And I feel like I've touched maybe 10% of the things we wanted to talk about.
I'll have to come back.
Yeah, you absolutely have to, because again, we are almost running out of time. We do have some time for a few more, maybe a few more lines of conversation here before we wrap up. And maybe we can kind of finish the conversation on this. We already talked about the key success factors on what makes a success in a large incumbent organization and these startups. But if there would be like one key takeaway from your book for people who want to engage in this fintech world, either in a startup or an incumbent organization, what would be that one key takeaway?
Can I give one for each?
Yeah, please.
So for the fintech side, I'd say that the biggest takeaway, which is not a surprise, but that doesn't make it less important, is that we often look at product innovation, product market fit, and pricing strategies as completely separate, but they're not. And the reality is that if you're starting building something, particularly now that the funding environment isn't what it used to be, the era of free money is over. If you're building something, the question of how many people do really want this enough to pay for it enough for you to have a business is a question that you need to answer to your satisfaction really early on. And there are a lot of dependencies. And there's some really interesting examples from Audax, from Infuse in there, around how your operating cost, your pricing, and your target addressable market are actually one conversation. But historically, particularly in fintech, because we've had easy access to investor money, that tie was not there. And you see companies that are considered pretty successful saying, yo, we haven't gotten our pricing right. We still don't know what our target addressable market is. So that era is over. So I would say that anyone who's looking at the book for tips on how to start a journey now, your operating cost, your price, your unit economics, your target addressable market, and whether people would, yeah, I'd like that, but I'm not going to pay for it. That's super important for both consumer and B2B solutions. It's unglamorous work, and it has to be done early on, and you need to know your levers. And there's some fantastic tips from people who've done it in the book that are actually immediately applicable. So it's not, throw you in the deep end and leave you there. For the banking side, it is actually, again, the unspoken complexities. Why do we fail when we have resources, we have reach, we have stability, and we already have product market fit? Why do we fail? And the reality is we fail because we lose heart, headspace, or attention. And so it's a more nuanced and softer set of parameters. But the reality is you need to stay the course. One of the things I didn't include in the book, because I didn't realize it until I had started reading, is that there was much more movement in people's jobs. Almost every single one of the corporates I interviewed changed jobs between being interviewed and the book going to print, which is very normal. Promotions, movement. But how does an idea stay alive when obviously the people that carry it forward are super important, but those people might move jobs? So it's as I said earlier, it's a different currency, but it needs to be managed the same way.
Perfect. Paul, did you have any final comments before we wrap up?
No, I don't actually think so. I'm really looking forward to sitting down in a corner, pouring myself a glass of red wine, and yet again a damp January, and actually getting through the whole book. I've really enjoyed what I've managed to read so far, and I'm really excited to read the whole thing. So absolutely agree. We need you back, and then we can do an even bigger deep dive into the book.
Absolutely.
I'd love to be back.
I will also finish the book, and then we absolutely have to have you back to have a conversation about the deeper.
And I will have it behind me, hopefully, by then. I will have received my very bright yellow new cover, which I'm very excited about.
Perfect. So, Leda, where can people find out more about your book and maybe get in touch with you to talk about everything we talked about today?
They can find me on LinkedIn, and they can find information on my book on LinkedIn and on the Routledge website.
Perfect. And you have the official recommendation of Fintech Daydreaming for that book as well. And what we've been able to read, it's a really fascinating guide for everything related to fintech and creating new things in this fantastic world. But good, this has been the episode 2 of this season, and we will come back in 2 weeks' time. And before that, of course, we have to remind you, like, subscribe, comment, share with your friends. That's the way we get more people to listen to all this great advice that we have from our fantastic guests. Now, that being said, this has been Fintech Daydreaming.
This is Fintech Daydreaming.